Hi, this is Linda Smith of Top Producer, and I have with me Jerry Gulke, who's going to talk with us about what's been going on in the markets the last couple days. Jerry?
Well, yeah, we had exciting times. I guess first of all, in that corn, we had the rally from June 30th on up to 410 in December, and then we backed off to, ironically, a 50% retracement thereabouts within a percent or two. Down to that 376 level, which got a lot of people nervous. The guys that were bears really got bearish, and the guys that were bullish came in and like end users and these people who thought they'd missed the market said, wow, here's a second chance. And they came in and bought, and then we rallied, yesterday. And now, and a lot of this has been carried on by the wheat, which in Europe has been making 13-month highs yesterday. Today, the wheat market in Europe, called the Matif, I guess, rather than our CBOT, actually closed lower for the day, and got the market still a little nervous, thinking, well, maybe the top is in wheat. But the problems still exist in Russia, maybe getting worse. They're going to stop some of their exports and all that, and we know that somebody's going to have to come to us for feed grain. And so the market was open higher today, backed off a little to even down on the day, I think, a little bit in corn. And now the weather, believe it or not, or I guess I'm not surprised, and we shouldn't be, but the weather changed again today. Drew Lerner, for one, has been rumored to say that he's taken some of the, we were going into the first part of August looking great. We're going to be hot and wet. Now it looks like we're going to be hot and dry or drier. And we're still keeping these warm nights. And there's more and more evidence coming out of guys actually looking in their field. And I would encourage listeners to walk out in your field if you've got corn that's, the silks are brown, and we're getting in maturity. We're going to be combining corn in northern Illinois probably the third week in September. So we're 2 months away from harvesting this stuff. And what we've done this year is accelerated the maturity of corn or shortened this kernel filling period. So the theory would be that the less time it takes to bring to maturity, the less time you have to fill the kernel. So we could lose some yield that we think is going to be there just because the kernel is shallow. And we're getting some clients now going out and looking at that and coming back and saying, yeah, I got my agronomist out, and he's saying, yeah, where we're at, we're getting very close to where we can nail down this yield, and the kernel depth isn't going to be there this year. On the flip side of it, we get guys in northern Iowa and maybe in Minnesota saying we don't see a problem. And, of course, I think what it involves is the further north you go, the cooler the nights are. The further south you go, the drier it is, and the hotter it stays at night and in the daytime. 1 or 2 degrees makes a difference. So what we've seen in the past where we've had crop problems, we've had hot and dry, and sometimes we've had dry and cool, and we've kind of determined that it's the heat that hurts the corn, and especially at night. So it has to do with how they do the starches and all that, and the agronomist could tell you more about it, or even you may even know more. But at any rate, that's starting to enter the market. So what we're seeing is that this is not a perfect year all over, and the market is kind of anticipating not much change in acres and not much change in yield now going into August, and that probably is putting a floor under this. So my opinion is on a day like this, when we've got all of us knowing we got a really good crop out there, maybe we're too optimistic because of the early start, and then you see corn jump, and now you see it back up again to where it's trying to get above $4 in December. If we can close corn today higher, then I think it opens up for tomorrow to be even stronger. Or there's a chance that on days like this, if you make new highs on the day, at the end of the day, that means a lot of bears are throwing in the towel and have got caught short this market, and now they got to run for cover. So we have fundamental things going on in the world that says that we may not know how high this is going to go, but we know we got a lot better support under these markets than we thought just 30 days ago. So I would err on the side of caution in selling grain, and I don't see anything wrong with being 40% sold, but if you do it in the futures, you almost have to do it in futures if you're like me, because our basis is 55 to 59 cents. They're trying to steal it. I guess I'll hedge it off thinking at some point in time that basis come next spring or next summer is going to be 25 under. So that's where farm storage really helps, and being able to outlast the market and outlast that goofy wide basis where, in my mind, they're kind of trying to steal the grain, so to speak. But at any rate, I don't mind being 40% sold. These are profitable prices, but be careful in selling into rallies from here, because it could just be the beginning, especially if we can take off again in the United States. So I'm sure the weather's going to change 3 or 4 times before the middle of August, but turning back to hot and dry is not what we need for corn to finish the year out, or what we need with beans pollinating, flowering and setting pods. Flower abortion could occur, and what we're seeing also is it's pretty warm in the northern part of North Dakota where they grow canola, which is in short supply worldwide. You don't like to see 80 degrees up there, so we watch that side of things as well, and 70s is better. And if that stays hot and they get to 90 degrees in their flowering time for their canola, then suddenly we're going to see a bad canola crop or a lower canola crop get lower. So we'll see how it ends up for the week tomorrow, and we'll be on tomorrow after the close again. Have a good day.
Great. Thank you very much, Jerry.
Okay.